All right. Good afternoon. Good afternoon. How are you good people doing out there on this lovely Thursday afternoon? How are you guys doing? Welcome to PROBY'S Tax and Accounting Thursday afternoon Q&A. Elaine Proby here, CEO of PROBY'S Tax and Accounting. Financial service firm, guys, doing business here in LA for over 35 years. And during the process, we have helped a lot of businesses formed. Actually, we've formed a lot of businesses. We have helped a lot of businesses to grow and become very, very, very successful. And today we're talking about a topic which is don't start a new business, guys, before y'all watch this video. So hit like and share. I am totally excited and ecstatic about this topic today because I am always excited when somebody wants to start a business. I'm more than happy to let you know what type of business I suggest that you might need to start and what you need to do. Okay, so I am so excited today about our topic, which is before you start a new business, you guys want to listen to this. Okay, so hit like and share. And today we're going to have some fun with this very valuable information I'm going to share with you guys today. Okay. So I want to welcome you guys on here again. Elaine Proby, CEO of PROBY'S Tax and Accounting. All right. So we're going to talk about don't start a new business before you watch this video. And I'm going to point out 3 things today that you guys should be looking at. And the first one is, should you form an entity? All right. If you want to start a new business, should you form an entity? 2, we're going to talk about what type of entity should you form. And 3, we're going to talk about the tax effect of those entity or whichever one that you choose to form. Okay. Because right now we're doing a whole series about what about your taxes, and whatever it is that you do business wise or personal wise, your taxes are affected. So we're going to talk about how your entity is going to affect your taxes. Okay. So we're going to have 3 points today before you start a new business. 3 things that you guys I want to point out for you today. Okay. So thanks for jumping on. Afternoon, Laverne. Afternoon, you guys. Hi, too. Thanks for jumping on here. And let's start off with the first point today, guys. Before you start your new business, let's talk about, should you form an entity? Okay. So I know a lot of you have many business ideas that you come up with all the time, and you tell yourself that you're going to start a business. Sometimes you filed your fictitious business name, and then that's it. Sometimes you may make up a business card or do something to get the business started, and then you may not continue to do anything after that. Okay. And I chalk that up to being having an incentive to run and operate a business. So I suggest that if you start a business, guys, form an entity. Form an entity. One, it does several things. All right. What it does is it protects your personal assets. Okay, so if the business gets in trouble for any reason or gets sued for any reason, it protects your personal assets. So you want to do that. And more than all, I think it gives you an incentive to operate your business, because now you're thinking that I have made a commitment. I have formed my business. I'm now ready to work it. I'm now ready to be successful at it. And, it just kind of give you an incentive to get going. And I am always excited when my clients come to me and ask, should they form an entity for their business? And so this is one of my favorite topic, guys. One of my favorite topic. Okay. So go ahead, and I will suggest that you form a business, form an entity for your business. You guys, you can of course have separate consultation on this. I'm going to talk to you about the different type of entity that you can file and how it's going to affect you in this video today. So it will help you through the process to determine what it is that you should be doing with your business. Okay. All right. So if you are operating from a self-employment perspective, right? Number 2, we're going to talk about the type of entities that you can file. Okay. The type of entity that you can file. This is my second point today. And there are those who would just want to operate from a sole proprietor perspective. Again, that goes back to not forming an entity. But if you choose to do that, of course, it's, you can operate from a personal perspective, a sole proprietor. You can file a fictitious business name, and you can operate that way. The idea today here is, should you form an entity? And so the other type of entity that you want to file is, one, you can form a corporation. Okay. You can form a corporation. And there is two types of corporation. Once you form your corporation, you can choose to become an S corporation. Now we're going to talk about the tax effect of the various type of entity that you form. But for now, in number 2, I wanted you guys to understand that you can form a corporation. You can remain as a C corporation, what they call a C corporation, and or you can form an S corporation, and I'll let you guys know what the tax ramification is for either one of those. Okay, so then you can either form an LLC. Right, an LLC is the other entity that you can form, an LLC, which is a limited liability company. Right, so you can form a limited liability company, you can form a C corporation, or you can form an S corporation. Now, all these different entities, they operate totally different, and there's different tax effect for these separate entities. And I will, on my third point, tell you more about the tax effect depending on what entity you form. Right? So, guys, once again, welcome here, Elaine Proby, CEO, PROBY'S Tax and Accountant, and I want to welcome you guys on here. This is the Q&A. We can take questions on the screen, of course, or I'll come back through here and get those questions and answer them for you. So keep your questions and put them up there so we can answer them at the end of this session. All right. Now, one of the things before I get into the tax ramification of the different entity, guys, I wanted to point this out. And I get this question from my clients all the time. This is a regular question. Clients call all the time and ask this question. Their biggest thing is, should I incorporate in another state? And I want to bring this in because this is super important. And like I said, every client asks this question. So I incorporate in another state. Now, I just want you guys to understand this. There are states that doesn't have the state taxes. Some people want to incorporate in, say, Nevada. Some people want to incorporate in Wyoming or Delaware. And you live in California, guys. Here is the deal. If you incorporate in another state, which is not your home state, and make this real clear, because this is a very common question. If you incorporate in another state that is not your home state, now you've got to deal with the other state that you incorporate in. You have to deal with your home state and, of course, the federal government. So now you have 3 things to deal with. It's more costly and it's more complicated. Okay, keep that in mind because everyone seems to think that they can incorporate in a tax-free state, Delaware, Wyoming, Nevada, and then they can operate out of California. It doesn't quite work that way because if your home state is, let's say, California, let's talk about California because this is where we are. If this is your home state, guys, you will still have to register as a foreign entity doing business in the state of California to operate in California. So now you've got 3 things to deal with. Okay, so I just want you guys to keep that in mind because this is a very common question, and a lot of people is confused about this. They're confused about this. Should I incorporate in my home state or should I incorporate in a tax-free state? Okay, so that will tell you, that's number 2 about what type of entity you should form, whether you're going to do a corporation and whether you're going to elect to be an S corporation or whether you're going to operate as an LLC. Okay, so those are the type of entity that you can operate under. All right, so guys, let's move on to our third point today. This is the most important right now, is because it's the tax effect. You want to know how these different entities will affect you tax-wise. This is what we're talking about. What about your taxes and how it's going to be affected by the different entities that you form. Okay, so that's the third point, the tax effect. If you choose to operate as a sole proprietor, that's not forming a separate entity, but I still need to bring that in because a lot of people may choose to just operate as a sole proprietor. If you choose to operate as a sole proprietor, guys, you will report your profit, your income and your expenses on your personal tax return. It's going to be on a form Schedule C, which is for, your business, and it's on your personal tax return. Okay, so as a sole proprietor, your income and expenses is reported on your personal tax return. You pay taxes on the net profit. You pay not only income taxes, but you pay Social Security taxes on the net profit as a sole proprietor on your personal tax return. Okay, so that's the first thing. If you choose to incorporate, and you form a C corporation. What we call a C corporation, you form a corporation, right? The corporation pays taxes. It's a totally separate entity from you. Now, your corporation is an entity and you are a different entity. So now you have two things to deal with. So the corporation pays its own taxes. The C corporation pays its own taxes. It's report all of its income, all of its expenses, and it pays taxes on the net profit. Okay. Now, some people is not enamored with a C corporation because of the double taxation that is that it has, which means that the corporation pays taxes on the profit, and then when they distribute that profit to the shareholders have to pay personal taxes on that money again, right? So what happens is, this is why you hear about the double taxation. Oh, the double taxation, I don't want to have the double taxation, so I don't want to do a C corporation. Well, look at it this way, guys. Sometimes it might be beneficial to have the C corporation because you can accumulate your profits within the C corporation. You don't have to pay the dividends, okay? You may want to pay dividends at a later date when your other income is lower and your tax bracket is lower, and then you take that money out. So you could really save on taxes. This is some tax planning, okay? So having a C corporation might be beneficial. You can accumulate profits in that C corporation over term. You can accumulate profit in there, and you don't have to take that money out to pay taxes on it again, so you wouldn't have the double taxation. So it might be very beneficial in the long run because you can plan ahead as to when you want to pay these dividends, as to how your personal taxes look, and you have an option. You have an option, and nothing like having an option, right? You take the taxes out, the profit out when your tax bracket is lower, and or you leave it there. So that's the option that you have with the C corporation. All right, so let's move on to the S corporation, guys. The S corporation is an election that you make. Once you form a C corporation, you make an election with the federal government to be treated as an S corporation. What an S corporation is, it is a corporation that acts where the profit passes through to your personal tax return. However, the S corporation does not pay any taxes to the federal government. The profit passes through to you, and you pay taxes on your personal tax return. The difference between you paying personal taxes on your personal tax return from the S corporation, because that profit comes to you on a K1, totally different from your personal Schedule C as a sole proprietor, because, guys, this is very, very important. Listen to this one. Because you can minimize the Social Security taxes on the profit on the K1 when it passes through to you on your personal taxes. Okay, so listen to this again. Repeat. You can minimize the Social Security taxes on the profit from your S corporation that comes to your personal taxes on the K1. You can minimize the Social Security taxes. You pay income taxes, you can minimize Social Security taxes. Okay, so that's a great entity to form. That's a good business structure to have, and it works in many ways, especially for the small business. Okay, so that's the S corporation. Now let's move on to one of the most common. Everybody is always excited about this one too. This is the LLC, guys, and there's a lot of confusion about the LLC. Now, I want to make it clear, if you form an LLC and you are the only person in the LLC, it's considered a one owner LLC, okay? If that is the situation, guys, it is treated by the federal government as a sole proprietorship, right? A disregarded entity. It's not a separate entity from you. You have to file your taxes and claim the income and expenses on your personal return that you make in the LLC. So for all you guys out there who's excited about forming an LLC, if you're a one owner LLC, guys, there's some more steps that I would suggest that you take to separate the business from yourself, if that's what you want to do. Okay, and we can get into that further. You guys can get some more consultation on this. But if it's a one owner, it's called a single member LLC. You have not separated yourself from your business tax-wise, and the federal government will tax you the same way they tax you as a sole proprietor, okay? So this might sound a little complicated, guys, but we can clarify this, of course, at PROBY'S Tax and Accounting and make it more simple for you guys. But that's what happened with the LLC if it's one person. Now, if it's more than one in the LLC, of course, it now acts as a partnership. It now gets taxed as a partnership. And each partner in the LLC will get a K-1 with their profit or losses from the business, right? Based on your income and expenses. Each partner will get this K-1. And now these dollars will come to your personal, same way it does from an S corporation. It will come to your personal tax return and it will get taxed on your personal tax return. Once again, guys, the LLC, if there's more than one partner in there, it will be taxed as a partnership. You get a K-1. The partnership pays no taxes to the federal government, but you do. And on your personal return, like the S corporation, okay, you can minimize Social Security taxes. Okay, so I love this part. So anyway, if you guys out there have any question, put it on the board. We can answer those questions here. I'm excited about starting a new business. I'm excited about setting them up, guys, and I'm excited about, explaining and further consult you on the type of entity that you should be forming and how it affects you tax-wise, okay? So wait a minute, here's a question. Should I form an S corporation if I have a partner or just form an LLC instead with a partner? Okay, so the question is, should I form an SCorp if I have a partner or an LLC instead? Okay, now, you may want to form an SCorp instead of an LLC simply because an SCorp you're recognized as a corporation, right? The LLC is a partnership. And if you have an LLC in for tax purposes in the state of California, there's LLC additional taxes based on your revenue. If it's over like $1 million, there's additional LLC tax that you pay. So we can get into the financial and tax situation of whether you want to stay as an LLC. I've had a lot of clients who started off as LLC, and as their business grow and they start making millions of dollars, they decided that the LLC was not the right business structure for them. And so we wind up doing a corporation for that. Okay. So, yeah, I would suggest though to do the SCorp. All right. So let's see. With a C corporation, do you also need a fictitious business name statement? Good question. Good question. Good question. Okay, I see the question up there. Good, great. Now, with a C corporation, do you need a fictitious business name statement? In the state of California here, once you form a corporation, you don't necessarily need to have a fictitious business name statement. Now, a lot of people will file a fictitious business name statement just to protect their name locally, so that if someone wants to use the name locally as a sole proprietor, they would have that name already registered with the city, with the county. But you don't necessarily have to have a fictitious business name with a C corporation. As long as your name is not taken with the state of California when you register, you're perfectly fine to operate as that corporation with that name. Okay. All right. So that was a great question. Any other question up here? Hi, Dorothy. Thank you for assisting me with forming my S corporation. All right, you're very welcome. You're very welcome. I'm so excited really about this, guys. I'm telling you, when it comes to forming and setting up a business, making sure that you're operating in the right structure, making sure that you're saving on taxes. I mean, this is what we do here at PROBY'S Tax and Accounting. We're very excited to make sure that you guys are operating from the right place, and that your business thrive, and that you make money and take advantage of all of the tax code. And of course, whichever the best business structure is for you at that time, and based on your business, you want to make sure you don't have too much liability exposure, which is the key for forming an entity so it can protect you. Make sure that you have the right structure for you to operate under. And of course, guys, this is something that we can discuss further. Again, give us a call here at PROBY'S Tax and Accounting at 323-290-9034, or visit our website at probystax.com, We'll be glad to help you with that, okay? And any other questions over here? Thank you, Rita May, for jumping on. All right. Hey, Laverne. Hey, Lee. I want to thank you guys for jumping in here today. This is really great. Like I said, I'm totally excited about this. You guys want to start a business here at PROBY'S Tax and Accounting. We can do entity formation, and it comes with a lot of consultation. I will make sure that you guys form the right entity. I'll make sure that you know what to do with it next. I'll make sure that you know how to operate it, and we will assist you in making sure that you can scale your business and become very, very, very successful. This is what we do with all our clients. Okay. So, all right, guys, thanks for jumping on. Elaine Proby here, CEO of PROBY'S Tax and Accounting. I want to welcome you guys on here again. You guys stay tuned. Every Thursday afternoon, we'll be back bringing you guys some very valuable information, business and personal, and specifically making sure that you stay on point with your taxes. You have tax planning in advance so you can keep more money in your pocket, more of your hard-earned money in your pocket. This is what we're here for, okay? All right. So with that said, I want to thank you guys again. You guys stay safe and take care of yourself, take care of each other. Have a fantastic day. And I really do appreciate you guys for jumping on. All right. So I will see you guys back here again next week, either Tuesday, if we have any updated information financially, any new development, and or of course we'll be back here again Thursday with our live Q&A. All right. So I'll talk to you guys later. Thanks. Bye-bye.